Louise here, your host of the Talking Trading podcast. This is how traders excel. Now, I wanted to talk to you a bit about risk today. There is a little story that I have for you, and it involves me making a very bad decision. And I'm sure that you'll agree that sometimes we frame things incorrectly. I was on a beautiful beach, absolutely gorgeous, up far north Queensland, white sand, blue water. What a perfect day. And I saw along the beach something that looked like bubble wrap. Now, gosh, I love to pop that bubble wrap. Isn't it fun? I could just spend half a day doing that. It's just so exciting. Just that pop, 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 so satisfying. And I saw on that beach what I thought were little blue plastic bags. And I went over and popped them. I had my sandals on and I popped them, and wasn't that exciting? And then a little voice said to me, maybe they're not plastic bags. Oh my gosh, I was popping jellyfish, blue bottle jellyfish. They're actually known as Portuguese man of war. They were very picturesque, unrecognizable as jellyfish, but definitely something you should not pop. You should not pop these at all. I had no idea that I was putting myself at a huge risk. Now, I am inviting to the show today Robert Mennella. Robert, what do you think about my story about jellyfish and the risk that I had no idea existed?
Well, I think it's a great thing to analogize with investing, in that you don't want to really poke your fingers around in things without doing your homework first, or trying to recognize something for what it isn't, as opposed to what you think it is.
Oh, it's so true. And there are so many lessons in many of our life stories. Now, I'd love to introduce you, Robert, and I'm going to ask you to fill in the blanks if I skip anything out. You've had such an extensive background on Wall Street, and I know that your book, Heavily Redacted, a J.P. Morgan whistleblower's journey, is just going gangbusters. So you started as a junior stockbroker in 1989. Which was actually the year before I started trading. So we're right on the level there. And you definitely climbed that corporate ladder, which is great. I did too. It was wonderful. And I just thought it was wonderful to see that you did the same thing, but you were on Wall Street at the time. So you had a growing fascination with technical analysis, and you really loved the idea is, can you predict the future using charts? Now, Robert, I have chatted with you in the past. I have followed you on LinkedIn. I'm a big fan, my friend. What if I skipped out in that brief little description about your background?
Sure. So 1989, a young whippersnapper, 27 years old, saw an opportunity of a lifetime to work on Wall Street. And I took it. And that's where it started. I was licensed and I was a stockbroker. And we were promoting initial public offerings for biotechnology companies. And it was very interesting. And I loved that aspect to it. And I did that for a couple of years before a few friends and I broke off from the firms we were working at, started our own little firm. So because we didn't have an investment banking arm or any connections to market makers, we had to come up with some ideas to pitch to clients over the phone. And so I read a few books about the stock market. I read a book called How to Make Money in Stocks by William O'Neill. He's the founder of Investors Business Daily. And I started following his paper. And it was, the Wall Street Journal, the New York Times, and then Investors Business Daily, which was really an industry paper that gave you all the in-depth analysis, fundamental analysis, as well as technical analysis. And that's where I kind of really got interested into the type of charts they used, were candlestick charts. And I researched into candlestick charts, and they're thousands of years old background, having been used in rice trading back in old China. So that really intrigued me. And I started following the charts, and I started following the fundamentals, and I became, I guess you could call me, I was the analyst as well, a self-proclaimed analyst for our little firm that we had there. So that's when I first got introduced to charts and technical analysis, and it really piqued my interest. And researching it, I showed that you were able to predict outcomes based upon patterns that occurred in the past. And when I came up with a few patterns that I thought would work, and they actually did, that was really the most rewarding. And it was when I was able to pass on that knowledge to my clients, they made money, they were very happy too. So
Yeah, that's
I
the
did that
key,
for a
isn't
long
it?
time. Yes. The
Now,
key is to make your clients happy.
yes, completely. And money does that beautifully. Now,
Sure.
I want to delve into your book. You are a whistleblower. And
Yes.
definitely in this book, this was a very brave move. I know before this interview started, you were telling me that you self published Heavily Redacted, a JP Morgan whistleblower's journey, because
Yes.
a whistleblower book does not get backing from the big publishers. You are out there on a limb, my friend. I want to hear more about being a whistleblower. What did you uncover about Wall Street and JP Morgan?
Yeah, well, it's kind of a sordid story, but at the end of the day, I had worked for smaller boutique firms throughout my career, and that's what I really like to do. It was a small tight knit community and family, and I like doing what I did. But I wanted to work for a bigger firm because as I got a little bit older in my career, I wanted a little bit more of a stable a company that had been around for a long time. And so I chose JP Morgan and I applied for the job. They hired me, basically on the spot because of my background. They were looking for people with 5 years history of being an investment advisor before they could hire you. And so that's why they basically hired me right away. So it was a very different environment from working over the phones, at a stock brokerage firm and working for a bank for bank customers in person. It was a whole different environment for me. But I adapted to it and I really took to it and I really liked it. And what I realized is that banking clients, they want conservative investments for the most part. And there came a time when later on at the end of my career with JP Morgan, the client's objective and the firm's objective butted heads. So the client's objective was to try to make a little bit of money, but stay as safe as possible. And the firm's objective was to kind of placate that customer to make them feel as though they were getting the safety they wanted, but at the same time, taking the risks and not disclosing a lot of fees and some of their marketing material. So when I objected to it, the firm objected to me objecting to it. And the rest of the story is in my book without really giving away the whole thing or a spoiler. But, at the end of the day, if a big company wants to get rid of you, they can just get rid of you. And that was a quote from my manager. And I was blacklisted from the industry after that. I tried working for a couple other firms. They called JP Morgan's compliance department, and that was the end of it. And so that's when I reverted back to my passion for charts, and LinkedIn was becoming very popular. I originally got onto LinkedIn to try to find a job, but I quickly found out that if you had some knowledge in something that a lot of people were interested in at the time, you could develop a following for yourself. So I kept posting and posting and posting about technical analysis and my predictions for the future. And that's how I developed my following. And, not everything I predict comes true, but I have a lot of good examples of how technical analysis worked on my behalf to help me with the odds of predicting the future
Yeah,
as
that's part
opposed
of
to just,
trading, though, isn't it? I
that's
mean,
what,
not everything
yeah,
we do works. We risk manage, we control, and we look after our own emotions. Look, I'm really interested in what you're saying here because
yeah,
in Australia, there is the best interest test. Now,
right,
years ago, the financial planners and brokers had to fulfill working for their clients using the best interest of the client as the guide. Now we don't have that. It's every person for themselves. So that is why education is so important for our traders. We need to really lift everybody's level because there is no knight in shining armor here. There is nobody who's going to rescue you. You have to make your own decisions about the markets. Now, I'm
that's right.
interested in what you're saying about that conflict between a larger company's goals and the interests of those traders. Tell me more about that, because clearly that morally set you up to be very uncomfortable.
It did.
You did something about it. You acted on it. I'd love to hear
Right.
more about that moral compass and what that meant to you.
Well, it meant everything to me because, I had been in the business for 25 years. I knew what was right and what was wrong. And I've left a few firms who asked me to do things I wasn't comfortable with. And, I was okay because I got to wake up and look at myself in the mirror every day. And, I'm not going to do something that, my mother wouldn't want me to do for the most part. But I think at the end of the day that trust is really blind. And too many people go to a financial advisor or a large firm because the assumption is, well, they're very successful because they must be giving people good advice. When actually the opposite is true. They're successful because if they don't care about the advice, they only care that you trust them and are willing to pay the fees to keep your account going with them, regardless of whether or not you keep up with the market or keep up with inflation. They're more concerned with a narrative than they are with results. So that's why I tell clients that the most important thing you can do for yourself is take the information that I've given you and do your own homework, and then come back to me with a couple of questions so that I can help you with it. Because when you just go to somebody and that person just has a sales pitch going, and a name behind them, that doesn't mean much anymore these days. I think most people and more people are able to kind of see through the veil of the profit motive behind the large banks and brokers and the interests of the investors themselves,
Look,
and
I hope so, but there is
yeah,
that bias called the narrative fallacy. If there's a good story behind something, then
right,
we have evolved from talking around the fireplace, sharing stories, working out who's
correct.
who in the tribe. We are still subject to those same emotions. And I think that good story can actually trump somebody's moral compass. So I just think this is one of the reasons why we bonded, Robert, is that
Yeah,
you actually stood by what you felt and your moral compass is very strong. Yes, your mum would be proud of you. Absolutely. Oh, I love that. Oh, yeah, mine too. So I'd love to hear some of the challenges that you faced. Now, not just in your time on Wall Street, but also as a trader, because you've evolved now to being a trader, and there's a slightly different emphasis investing other people's money and
right,
investing your own money and guiding other
certainly.
people how to invest theirs. Tell me more about that, and tell me more about some of the challenges you faced.
Well, the biggest challenge you have is financial. So, even though you don't have an income anymore, you still have your bills to pay. And so I went through my pension and a lot of my savings. And at this point, I realized that I wasn't going to be able to work in the industry anymore. So I tried a couple of odd jobs, none of which I really took to. So that's when I thought I would, instead of trying to reinvent myself, I would just try to be my better self, or the self that I was before when I had a passion for doing something. And so I went back and I started reading how to make money in stocks again. It was a great refresher. I started getting on LinkedIn. I started developing a community of like-minded individuals who want to share the passion with me. And that really got me going. And that's when I started talking about some of the trades that I was doing and what I was doing for risk management. And other people had other opinions. And, that's great because I don't know it all either. And the more that I can put out, if I can get back, the same amount of knowledge, then I'm growing along with them. And that's really the greatest part about being on LinkedIn and having the community is that you have people that share your passion. And when you have that, you have something to live for, and you don't have to live in the past. Then you can live in the future, and there can be a future. You just have to have confidence in yourself, and you have to pick yourself up by your bootstraps and, just keep going.
You know what I'm
And
loving
that's what
though
I did.
is the alignment between your higher values and where you feel you needed to be as a person and your actions. I think so many times as people, we ignore or silence that little voice saying, do the right thing, because we have got a vested self-interest. However, by middle age, by old age, do you really think that's going to get you to sleep soundly at night? I think a lot of midlife crisis is because people have that disjoint. You listened to that voice and you pursued your actions in line with that inner voice, which I think is great. And it's a sign of a good trader. I'd love to extend that out into how has this helped you as a trader? Like, one of the things that I think we relate on is firstly candlesticks. You always just thrill me when I hear candlesticks because, as you know, I'm known as the candlestick queen, and I've written a
Okay.
book about candles, so the secret of
Yes.
candlestick charting. But also, the thing that I really enjoy is that you don't get overly sentimental or attached to a specific stock. Tell me more about that. Why do you feel that's important to be a good trader and not be overly attached to your stocks?
Well, I think the most important thing that I learned is that you have to be a skeptic and you have to question everything. And when you're reading, opinions about what a stock is going to do from 10 different people, you'll get 10 different opinions and 10 different estimates. But if you look at the charts, it's the same chart and the chart is not changing. It is what it is and that's the price action and that's what you go by. Now, I also do use a little fundamental analysis because you need to know why the chart is acting, kind of why it is, and what's the backstory to a certain extent. So it's not all just candles with no fundamentals, which some purists, stick to, which is fine for them. But for me, I can't ignore, the knowledge of my skeptic voice saying, well, this doesn't sound right, or, oh, this sounds like good information that I can act on, and the candle's backing it up. So here, let's go, and then make a move. So yeah, I think my experience has made me a huge skeptic of the talking heads out there, especially the ones that are working for the bigger firms. And so yeah, I like to think my own mind.
I like that. I think that is a trait of a successful trader. You have your plan and you make up your own mind rather than getting led by the news or the talking heads or even a newsletter. You actually do examine, does that fit with you? What other things distinguish an exceptional trader?
Well, the thing that's happening right now, and the thing that happened to me is that there's there is a trader job that you can get right out of college and become a trader. But most traders these days have done other things before. So transitioning to the role of trader or the challenge of taking on a career as a trader or trying to make money as a trader to produce income for your family, as I do, is not an easy thing. But if you start out with a good strategy, you stick to your principles, and most importantly, you don't get in over your head because it's very, very easy to go down the rabbit hole when you're on a winning streak and you start taking 50-50 bets. And those are the worst kind because you just don't know what's going to happen. And you might as well just flip a coin or go to Vegas. And if you could stick
Yes.
to some really simple principles, and follow them consistently, you know, you don't have to be a great trader, but you can be a good trader and you can make money consistently. You don't have to necessarily outperform the S&P 500, but as long as you follow a methodology that works, that's adaptable, that can be morphed into what the current market is looking at, then yes, I think you can be successful long term as a trader.
Yeah. And you've often talked about having an edge. Maybe could you describe what an edge is first and then tell us why you feel that's important?
Well, I think my edge is that I worked in Wall Street and as my background. So I've kind of had a background in all things business, and that's been my edge. But if you're coming from a different profession, say, you worked in oil and gas industry and you're retired. Well, you know a lot about oil and gas already, so maybe you want to trade commodities as opposed to stocks. Say you're coming from an accounting background, and you have an interest, you have a passion, and you have a profession, and you have the experience in that. So you might apply that to financial analysis of annual reports to see if something sticks out to you. So everybody has to develop their own edge. And the edge is usually based upon something that you already have knowledge of. And that's what mine was.
Yeah, I like that. But I also wonder whether an edge can be something that is more emotionally driven. So, one of the things that I think a lot of people have as an edge, if they don't have a background that is akin to trading, is that they could be incredibly persistent. They could be hungry for a goal, but then lacking in ego so that they can admit when they're wrong. They could be really good at seeking out a mentor and developing a relationship with that mentor. So don't disregard the things that are your soft skills. It's a shame that we call them soft skills, isn't it? My gosh, it
Yeah.
devalues the importance here. I mean, we've already looked at the importance of not having an ego, backing your values, being persistent in the face of adversity. All of those skills are so, so important, and they're all embodied by you, Robert. So
Yeah.
this is such an edge also. What are your
Yeah. And you
thoughts?
forgot to mention patience. Patience
Patience.
is
Yeah.
the biggest one. I mean, I would put that one up there, right at the top of the list, because you need patience when you're trading, because especially when you're correct and the stock is going your way and you have a certain target and you're right up against that target, the patience to not hit the bid and just wait for your trade to be taken out is, I think, what sets apart those that have the temperament and patience to trade and those that may not.
Yes. Yes.
So you got to be
Absolutely.
disciplined as well.
Yeah, yeah. There are these inherent aspects that we can bring to the fore so that we can excel in the markets. Do you know though, knowing all of this, I was I was at a dinner table once and my sister's husband to be, who I'd only talked to a couple of times, was there. And he said to me, "Oh, isn't it all just luck?" Oh, I had to pull back a little bit. Luckily, I'd already trained a couple of my nieces and nephews. They'd already done my mentor program. They were sitting around the table and they just jumped on this person and just said, "Look, it's not like that at all." What would you
Right.
have said to my future brother-in-law if he had have said, "It's all just luck, isn't it?"
I would say he probably doesn't know very much about being a stockbroker or trading stocks. You can attribute things to luck, and if you're lucky, and they say it's better to be lucky than good, then certainly when you're doing those coin flips, and it comes up heads and you bet heads, then yes, he's correct. It's luck. But in those instances where this is what you do, and you can't just write it off as luck, just because you're not really sure about what you're saying, or maybe might have a little built-in ignorance, then certainly that's a possibility. And no disrespect to your future brother-in-law, but if he picks up a few of your books, I think he'll change his mind.
Oh, I'm hearing you. Do you know as well the thing that is difficult for people is that often a dream is the most fragile when it is first birthed. So if he had have said that to me in the first couple of years of me trading, then that could have been a different impact. I mean, as it was, I just went, "Oh, expletive, insert expletive here."
Right.
And as
Yeah.
if in my mind, but when you're starting out, it can be different. I think that can be a hard thing for people if they blab about their dreams and then they get shot down. Yeah.
Yes. That is definitely something that all traders will experience. They'll have a good winning streak, and they'll kind of be a little bit happy about it. They'll tell a few people about it. Maybe they'll seem a little over enthusiastic about it. And the person that you're telling is really not as excited about it as you are. So in the back of their mind, they might be saying, well, this is not going to last. And so when it doesn't, they can say, I told you so. And then you can say, maybe I should just keep my wins to myself in the
That's
future.
it. Oh my gosh, there's that German word, Schadenfreude, which is you're kind of happy when your sister's hair doesn't work out at the hairdresser because there's
Right.
that little part of you that likes that dig. But there's
Karma.
also the German word Freudenfreude, which is where you are happy when somebody else does well. You're part of the bigger collective and everybody boosts everybody. So I think that is something that people forget too. We've got a desire
Yes.
to see people do well. How much do you feel habits are a part of being an effective trader, developing habits and maintaining habits?
Well, we'll certainly have to have habits. That's the first thing you have to have is a system, that you go through, a ritual that you go through every single day where you check certain things and you match up certain things and you go through your screens and you look for the next good idea. Yeah. So you definitely have to develop some good habits and some good screens. And while the market's not open, you want to, maybe have a journal of what you've learned for that day and, keep that journal handy. So if you have any ideas off the top of your head, you can, instead of losing them into the void, you can write them down and have a written, context of what you were thinking at the time and why. And that's always good. And that's helpful as well.
Yeah. And what about self-control?
Well, you've got to have self-control. I mean, the market moves around, very quickly, and a lot of people can let their emotions get the better of them, fear and greed being one. And I think if you have a system in place where you can eliminate or at least lessen your emotions as it pertains to your trading process, then you'll be better off because you won't have to suffer the fear or the greed, which
Yeah,
both can be bad at some point, right?
absolutely. Gosh, they're two halves of the one coin. As you're speaking, I'm thinking about the word decide. So apparently the word decide developed from the Latin word, which means to cut off. So with what you're talking about as well, where you're prepared to cut off your career, because I mean, this has been a big journey for you. There is no doubt. You made a moral decision and you were technically punished for it. You
Yeah.
cut off the ability to get a good reference because these people, they don't mess around with that. But
Yeah.
also, that does involve a fair bit of grief because cutting off some of those aspects that you probably value to your identity core, that would have been very difficult. How did you manage to cut those parts of your life off?
Well, the bridges were burned, So once the bridges were burned, there was no going back. And so I had to march forward. And so I did. And I gave up a few hundred good clients that I had really good relationships with, both on and off work, and basically because of my non-compete agreement, I wasn't allowed to contact them for the first year, you know. And then after the first year, I kept contact with a couple of the nice ones that we got along really, really well. But that was a big part of my life that I missed, and now I was kind of isolated at home, trying to figure out what to do, sending out tons of resumes to no avail,
Yeah.
taking jobs I really didn't want. And then just realizing that, I had this talent, I had this ability inside me and I had to let it out. And that was when I realized that instead of trying to start doing something brand new, I would just do something brand new based upon what I already knew, you
Mm.
know, and I had to rely on just myself. And I think that kind of circles back to when I got into the business because I had no knowledge of Wall Street or business. I was working with my hands at 26 years old after college, and I was doing fairly well. I had my own trucking business. I had a bunch of trucks and a number of employees, and I gave all that up. I was like making good money. I didn't know anything about Wall Street. I decided this is what I'm just going to do. I'm going to give up this other good business and I'm going to start this new business because I recognize the potential is more.
Yeah.
And I was still very young and I studied really hard for the Series 7. I hadn't picked up a book in probably, 7 or 8 years before that. So But, I was always good in school and I was got good grades. So, it was like riding the bike. I picked up the material and I passed the test on the first shot. And, I just hit the ground running from there, so
Because
it was,
often when we're going through a transition, it can be a very big time of flux. There are a lot of people listening to the show that I know are in a situation of pain. Their boss is making unreasonable demands. They're working far too many hours. They're perhaps going through a marriage breakdown. They've got something there that is like a stone in their shoe where they know they want to be a trader. They feel it within them, but the risk feels too high. How do you help people through this so that they feel that they can move forward but still feel safe?
well, I think everybody's risk tolerance is going to be different. So, there are people who, if they have enough money to pay their expenses for, at least a couple of years, have a little extra money that they want to try trading, then certainly it does take a leap of faith, but you do have to have confidence in yourselves. For most people, maybe trading isn't for them. Maybe they should just keep their money in a safe municipal bond, paying a good rate of interest, where their risk is being attained, because they don't have a high tolerance for risk. And if you are going to embark on trading, you do have to have a higher tolerance for risk than most people, because it's not for everybody. It does take a certain temperament. So the first thing you do have to figure out is what's your tolerance for risk.
Yeah, I
If it's
like that.
high, trading
Mm.
is for you. If it's medium, maybe trading less often, then do more fundamental research is for you. And if your tolerance is low, you might want to just stick it in some bonds and they'll follow the financials for a while. Or you could try trading on paper without risking anything at all, just to
Yeah.
see if it's something that you think that you go back and say, well, maybe I should have put money into this, and maybe going forward, maybe I will try this out. So,
One of the things I advise people to do before they just tell their boss to go and shove it is to actually earn money out of the markets that they can live on for 1 year. So they're working their job, they're working in the markets as well, and they're living off the market income and they're banking their primary source of income. So that way you've got some level of certainty. You've done it for a year, therefore you can do it ongoing. I do think people do make jumps too soon. They neglect aspects here that really should be considered. Working to a written trading plan, measuring results, and making sure that they have that emotional ability to withstand some of the blows that the markets can give to us. There is no doubt that can still sideswipe even experienced traders. So it is very good. I love your advice. One of the reasons why I started working with my business partner is because I watched him walk away from $8.5 million because of his moral compass. He had a business partner way back when I first met him. That business partner did a pump and dump. So for those of you that don't know what a pump and dump is, it's where you say, this stock is the best ever. It's fantastic. You can do no wrong. And as people are buying it, he's selling it. So his business partner did a pump and dump. Chris walked away from the deal and we became business partners because he left $8.5 million on the table. That got my attention. So I think sometimes actions speak louder than words. And listen to what Robert is saying. He's saying, make a planned approach, have self-knowledge, understand who you are, because that will take you a long way in the markets. Don't you think, Robert?
yes, I absolutely think that if you're going to take the leap into the markets, that you should start slow. You should see if it's something that you can handle, and if it is, then you go in slow increments. You don't have to dive directly into it. And I recommend to everybody that comes onto Patreon and gets their free trial for the first 7 days, that they certainly trade on paper if they're new or uncomfortable. And I also offer a little training session prior to all of my patrons coming onto the site. They have to go through that first. And so that describes, the way that you're able to transition to trading, whether you have a trading background or have no trading background, just to see if it's for you. Because,
Yeah.
like I said, not for everybody, but it is very exciting and it is very addicting, and you can make a lot of money, and if you do it the right way, it's a lot of fun. But when you lose money, it's no fun.
That's it. And that's when you need support
In a
as well.
nutshell.
It's almost like you need support in the two extreme areas where you've lost money, but also if you've made a lot of money, it's also how to maintain that equilibrium. So I want to talk more about how people can stay in touch with you, Robert. I know you just mentioned your Patreon subscription service, and from what I can tell, there's a free tier with that, but there's also subscriber tiers right up to the point where you recommend buy and sell recommendations. So
Sure.
could you tell us more about how people can find out more about you?
Certainly. So you can go on to my page. It's Patreon, Patreon/equity, EQWITTY. So patreon.com/equity. And there you'll find the free tiers, which you'll get access to my daily morning briefings just a day later than my basic service, which you get the daily morning briefings. You can also upgrade to the gold tier, which is the daily morning briefings, plus some coaching throughout the day. Or if you want to go all the way up to my Excalibur tier, that's where we stay in touch through Telegram app, and I'll give you buy, sell, stop loss targets. We have discussions. There's a message board where we all talk throughout the trading day. And that's the Excalibur tier, and that's $150 a month.
I love Excalibur. That's very good. I like that naming. Now,
And
Robert,
the first 7 days are free for all
the
the
first
tiers.
7 days are free. Oh, that's great. So you can try this out completely risk-free, which is lovely to see. Now, Robert, is there anything else that you'd like to say to our Talking Trading listeners, or any other advice that you can offer them?
Yes, I advise that you definitely go on to my LinkedIn page and follow me every day, because I'm posting every day or every other day. And a lot of the information that I post on LinkedIn has to do with what I posted for the last 7 years. And it's just evolved into a great little place for you to come and see what I'm looking at and what I'm thinking, and the direction that I might be going on my Patreon page. And it's another free way for people to know more about what's on my mind. So
I love
thank you
your
for
LinkedIn posts. They are fantastic. Look, Robert Mennella, author of Heavily Redacted, a JP Morgan whistleblower's journey. It has been such a pleasure having you on the show.
thank
Follow
you.
along. I'm going to pop every link into the show notes. So you can access the show notes through talkingtrading.com.au. Look up Robert Mennella's review there. Down the bottom, you'll be able to see all of the links that I'll provide for you so that you can stay in touch with Robert. And Robert, what a pleasure. You honestly, every
Thank you,
time I
Louise.
talk with you, you just bring out a new gem, and I just treasure them. I'm so appreciative that you are so aligned with your values and your actions. It is a pleasure to be in your company.
Thanks, Louise. I hope we can do it again.
Good, good. So everybody, enjoy your trading this week. Trade to your plan. And I will be back again next week with another interview on the Talking Trading Show. Bye for now.